We have good years and we have bad years. I mean, I do, you do, the majority of us do. You know which years you did really well for yourself. You know, the years that hurt. Okay, and this is the part that people fail to see. Everybody is really wrapped up and concerned with this aspect of it. But let me explain this side of it, because this is the part that people seem to really have a hard time with. So when I say assets, so assets are going to be right here on the top. Liabilities, and I would say equity. And yes, you have equity even in your own personal. Or when you're dependent on somebody, and your liability, that's it. Okay? When you start to bring in money, okay, and I see this happen all the time, not everybody that brings in money is earning it. Okay, I like to do this in terms that are really easy, and the way I did it was, let's just do them in terms of $1. So what happens here when you first get a job, you earn your first dollar. Okay? I don't know if those of you have had a job and received your first check. I'm sure that when you first start working, we're calculating our money. We know whatever it is you're making per hour. We know that we worked this many hours. You get your check and you're like, wait, what? What happened here? Well, tax hits you, right? And wherever, depending on what state you live in, that affects it, depending on what you claimed and all that marital status and all that good stuff. Whatever happens, at the end of the day, what you originally thought you were getting is not what you received, I'm sure. Your gross wages kind of get put here, okay? People don't see this. I'm gonna break it down in the most simple form. Okay, so what you get here is your gross. Okay, this is on box 1 of your W-2s. Okay, what comes into your checking account is not the full one because some of it had payroll tax, right? So those of you that pay payroll tax or have other types of deductions, you probably don't track it. I have trust issues, I track it. And I have found things. So again, it kind of leads me back to watch who you have set up your things, because it takes one person, one miskey or data entry error to screw up somebody's withholding, okay? What I would do for that, guys, is the payroll tax that you take out of this, so that's everything in box 2, 3, 4, all the 12s, 14, and 19, 20. So whatever are in those boxes are gonna total somewhere, and that's an asset. So I call it withholding. So if I were to take that, let's just pretend that it was half and half. So that's how it would be on my entry if I was tracking somebody's personal books. Yes, you got paid. Part of it was with withholding. Part of it hit your checking account. Okay, then what happens? You kind of go through this grind. You spend some money. You make some expenses. So everything that you spend is an expense. Okay, it doesn't mean you get to claim it. It means it's an expense. I like to spend just as much as everybody else, so I get it. I get it. I don't judge. I don't care. But if I could make the world understand where the value is to get as much of your money up here to put it right back into here. How do you do that? You invest. You can buy life insurance. Life insurance, and that's a whole separate topic that's a little bit more in-depth, but things that you can withdraw from, that's gonna always be in your best interest. But for me, I like to I want to see a return on that.